following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope that this is coming through okay here on TFNN. Al, we have a technical problem, buddy. There's a huge echo here, and this is not working. Sorry, buddy. I'm going to have to use Skype. This doesn't work. Sorry, buddy. I'll call back in.
Okay, got it. Okay, folks, this is Larry Pesavento sitting in for John Logan. John's still recovering. Hopefully, we're going to get him back soon. We're going to discuss a few things today on the next hour. On my show, in the second half hour, we're going to have Bill Meridian from Trend Research out of Vienna, Austria. Known Bill for many, many years. He's an expert researcher, astrologer. He worked in Abu Dhabi for, I think, 11 years, working for the Maktoum brothers. And he did all of their technical analysis stuff. And just to Austria, still doesn't work with them, but lives in Vienna. His wife is Viennese, Austrian, so very nice fellow. Very, very bright guy, too. So he'll be on at 9:30. To discuss the markets at our break, so we'll see. Okay, the first chart that I brought in today is chart of the New York Stock Exchange Index. Yesterday's high was 10 points higher than the 786 retracement. We closed 20 points below that, but frankly, it looks like we're going to be higher today. The Dow Jones Industrials looks like it's going to be taking out the highs from way back way back in September sometime, around that 16,838, I believe, is the number. Got up to 16,812 last night, and it's certainly looking like it's like it wants to go over. Now we're still in the window for a potential cycle date, but usually they're spot on. It was supposed to be the 6th, and with a potential of the 5th, and here it is the 7th, and it's still going up. So that's telling us that we are probably wrong this time, and we'll have to cover that as we go through here. And I wanted to show you the chart on the DAX that we brought out yesterday, and today's high was right at that number, 10,050, and 10,050. It was the high was 10,048, I believe, and so that was that one has fulfilled. It's an ABCD. The next one that we have to look at, of course, is we want to take a look at the FTSE. And if we look at that one, this one also, this was done earlier yesterday, but the prices have completed today with our high in the FTSE just 6 points shy of 6,400. And remember, the high on this thing was way back at 7,100 and change a long time ago, way back in April April or May. So this is a bear market rally, but it could extend a whole heck of a lot farther, folks. That's what it could do without any trouble at all. Now, the next set of slides that I want to go through are from my friend Todd Gordon, and Todd does a fabulous job with his Elliott Wave stuff, and he does do a lot of work with patterns, and he does a tremendous amount of research, and I think it's really interesting to see the one that is interesting. I'll put up this first one here. This one's really easy to figure out. I'm sort of joking, folks, because it's got so much stuff on it, but it goes through and shows you the things that happened on the way up from 2009. And remember, when we were at 2009, that was the end of the world. The S&P was trading at its triple sixes. The Dow was, I think Dow was down around the 1,300 or no, maybe even no, the Dow was at 6,500. That's right, 64. That's right. And so we've had this tremendous move, but this shows some quantitative easing things that have happened, and we're going to get an interest rate increase. I don't know when it's going to be, but it's most probably coming. So we'll just wait and see. Now, this chart is just too busy for me, but it just shows the relationship of quantitative easing and the S&P 500. It's beyond my pay grade, but I thought it was interesting because it was so very pretty and colorful. But the other ones were really easy to understand. And the next one that I wanted to bring up here is the one from the St. Louis Fed, that basically shows what happened in 2009 when the Fed, turned on the spigots, and we literally went ballistic on putting money into the system. And so far, it's worked with the stock market and some real estate markets it's worked for, but from the general economy for unemployment and stuff, the jury's still out on that, but we'll have to wait and see. Now, the next one I wanted to bring up from Todd is the one from the this is from Numberomics, and it's also showing you what the Fed funds rate has done. The most interesting part about this, folks, if you go back and look over the last 17 years, what we've done is we've completed a giant ABCD pattern there, almost in perfect harmony, from rates when they were about 6 3/4 all the way down to near zero. They're about 1/4% right now, and we've been here for well over 6 years, and without a rate increase. So this is very unusual. As the Chinese curse says, may you live in interesting times, and that's certainly what they have going on right now. So this market is going to turn on this Fed funds, and I don't know if I'll still be alive when this thing finally turns up, but history is going to go back and look at this and say, wow, this was really an unusual time, and it certainly is. And how it's going to end, we don't know, because it is basically it is a giant experiment. That's really what you're looking at when you're watching these things. So keep an eye on that, and we'll see what happens. We have some interesting things happening. Let's finish the charts with Todd. I did the Federal Reserve. I had one other one here that I wanted to share with you. And this is what he does, and I don't actually do this because it's too confusing for me, and it's beyond my pay grade. And it basically shows the difference between the S&P on an arithmetic scale and on a log scale. And the log scale time in relationship to price movement. So you can see that we've turned down in that thing with the log scale, but I think it's much easier. At least from a technical perspective, is to do what we've already done, and that is to look at it, on a long-term monthly basis on the New York Stock Exchange index chart, and you see exactly the same thing that we've broken down, and that's pretty much what's happened. Now, each time that this market is broken down, if you'll notice where we had those arrows marked on this chart back in 2009 and then also in 2007, you'll notice that the market rallied back one more time. Well, that's what's happening now. From our August 25th low, we have rallied quite a bit. We're into the 7th of October now. By the way, this is a really interesting day because actually it was the 6th of October, I believe, when the market 1987. But we're not expecting any type of a crash at this time. But with the market the way it is, it could certainly happen. At any time. Now, the few things, I've had a couple of emails over the evening here about the fact that the market responded really nicely yesterday to a higher high and then sold off dramatically. The Dow sold off over 150 points and then came back and has since made new highs from yesterday. As in the S&P, we've done the same thing in the NASDAQ. And as I mentioned, we've hit the 61% retracement in the DAX and then also in the FTSE. And we're over a big cycle day. But these puppies fail. Believe me, they do fail. And you certainly want to, protect your backside. And, if we get much above, the number that I'm looking at is basically 1995 in the S&P. My guess is we're probably going to go up to 2040, and it's still bearish. But this is just going to be a trap, in my opinion. But remember, it's just my opinion, and we've always mentioned opinions are like armpits. Everybody has one, and it usually smells. So keep that in mind. The Canadian dollar continues to go down, which is good. We've been short that for quite some time, really nicely. And the gold has broken out. Well, actually, gold hasn't broken out. It took out that trend line by just a little bit and didn't do very much. And the thing is silver didn't follow through, which is very unusual because silver's been the leader here. Silver got to $15.99 and a half. It didn't even get to $16 an ounce, which sort of surprised me. So I'm a little nervous in the gold, but still long. And I've raised my stop to just under 1144, and that's the way I think we should try to play it if you're still in that. If you're in the silver, the stop should be at around, I believe, around 1560 is where I would put the stop in on silver, just to protect ourselves, because sometimes when these things break out, they're false breakouts. One of our friends that called in yesterday, William Chu from Singapore, he was long some oil, and oil broke out above the August highs today, and we're going to see if this is going to mean anything long term. Now, at the same time that oil is doing this, let's just bring out the oil chart and let you folks take a look at it, because at the same time that we are looking at this, the prestigious firm of Goldman Sachs came out and with a very bearish outlook on oil. And here we have oil breaking out, into new high ground above the August, late August highs, and actually August. It took out all of August highs. So that long-term consolidation that we've been looking at was certainly the right thing to look at. 879-7648. Larry Pesavento setting in for John Logan.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. This is Larry Pesavento sitting in for our friend John Logan, still recuperating. Hopefully John will get back soon. I keep saying that, and I mean that he gets back soon, because he would be blessed. The next chart that I posted into Tiger TV today is from my good friend Andy Fink out of Bayer, Germany. Andy's a young man. He's probably one of the best students I've ever trained. Boy, he's a phenomenal trader. Does a lot of work with harmony and patterns and stuff, and he sent this to me last night when it was happening around the 1986 level in the S&P. As you can see, we made these higher highs over the 6th and the 7th. 3-drive pattern is one of the better patterns that we like. Now, this may or may not work. We've already backed off about 10 points from that high, and then we've rallied back a little bit. But if we go, much above that 1988 level, that tells us that this pattern, would certainly be wrong. Now, as that was happening, the data at 61% retracement level, and it broke almost 100 pips off the high, rallied back a little bit, and now it's trading just still substantially up on the day, but quite a bit below the numbers. So these patterns are shorter term. This happens to be an hourly pattern, and that's really what what we're looking at. Folks, I want to take a minute here and go over some history stuff. You may or may not be interested in it, but I'm interested in it, and I think you'll learn from it. When I was at Drexel Burnham from 1976 through 1982, I ran the firm's money. And one of the things that I did, we had about $4 million, which was a lot of money way back in 1976. And Treasury bonds had just started trading at the Chicago Board of Trade, and T-bills had just started trading at the Merck, and so we didn't get the S&P until 1982. But during that time, I was very bullish gold and silver, and I traded everything. I traded hogs, and I traded cattle and wheat, beans, corn, sugar, occasionally, never coffee, never cocoa, a few of the other commodities. Occasionally, but those were the main that I traded. And when I put an order in, the order was usually for 350 contracts, and that was over the group of people that I was trading. It was a batch order, and it wasn't a hedge fund because they didn't have hedge funds back then, but it was a group account, and it was a firm account. So in order to be in that, you had to be have a certain amount of capital to risk, which was, I believe, 100,000 was the minimum, and we did that for well over 6 years. And I had some phenomenal years, folks. I really did during those times. I've never repeated it, as a matter of fact. I had 5 years in a row where I did almost 100% a year, and most of that, I have to admit, was gold and silver, because I was bullish gold and silver, and they were going up, and that really makes it a lot easier. But let me tell you a few times where I've had some, situations where, it really was, stressful. One of those was in 1981, and I was probing for a low in the bond and Ginnie Mae contracts, and I had a rule in the fund that any time that I had a position that was losing after the third day, in other words, if I put it on Monday and it was losing on Thursday, the firm took me out automatically. That didn't happen very often, and I could go back in the same day if I wanted to, but they were taking me out. That was just automatic, and I told myself to wait one day, if I decided to do that, and it always protected me. On this particular time, I don't remember the exact time of the year, but I had been in the bonds, and it was the fourth day, and sure enough, there was a report that came out. I don't remember which one it was. Inflation was at 97%, something like that, and the bonds got hit pretty hard. I got stopped out, and I took my loss, and it was a pretty sizable loss, but not one of the biggest ones I've ever had, but it was a big loss. It stung. It was around, I believe, 1.5 or 2%, and so I just stood back and I waited a day or two, and one of my customers called me up, one of the people that was in the fund, and he also traded at Dean Witter across the street, because I didn't have spec business. All the business I had was through the Drexel stuff, and so he had an account there, and what he did was when we got out of the position, he reversed the position. In other words, he went from long to short, and he called me and told me, that he had made the whole loss back, right away. And I said, that's really great. And I said, he said, why don't you stop and reverse? And I said, I just don't do that very well, and I still don't. So I just want to let you know, when these things don't work, folks, get the hell out of the way. And believe me, this might be one of those times. We'll be right back after these few words.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for John Logan. And what I would like to do is someone in the den has asked me to talk about the Canadian dollar that we spoke about just a day or so ago, about the repeating market conditions of the Canadian dollar. The longer-term Canadian dollar, if you'll remember, made a beautiful 3-drive to a top pattern up around the 34.50 level. The high was 34.55. Since that time, the market has broken 400 pips
which is a pretty significant move in the Canadian dollar over the past 7 days. But the thing that I was trying to illustrate here, and all of my research in this business of speculation has been in pattern recognition. I mean, the last 45 years, the first few years I did a little bit of fundamental stuff, but after my debacle of 1974, I switched over to complete technical analysis, and that's what I do. As a matter of fact, I have to check Bloomberg in the morning or CNBC just to see that not the end of the world has not happened, or something crazy has occurred. Just for the news items, if the charts don't show it, then I'll have a pretty good idea. So we'll watch. Today's action in the stocks was actually caused by the strength all across. It started in Korea, and then a little bit in Hong Kong. China still hasn't opened yet. I think they opened today after their autumn holiday. And then Germany was very strong, as was the UK. So that's where the rallies really started. And we're still in the window of this cycle day, but frankly, I don't think it's going to work. It usually works spot on the day, and the fact that it's a day off is a little bit suspicious. But, that's neither here nor there. There'll be other opportunities. However, if we look at this Canadian dollar chart, and this works with any chart that you look at, folks, either up or down, what you want to do is when you have a real strong trending market, like the one we had in the Canadian dollar, what you look for rallies, and these rallies will repeat over and over again. Just if you'll watch this, since October 1st, we've had 4 major rallies in the Canadian dollar. Now, these are small rallies because the market's in a really strong downtrend, but they did last several hours, and they were all equal, about the same. They're all around 60 or 70 pip rallies, and then further down into the downside. Now, what we're looking at now in the Canadian dollar is that we've taken out. It's actually gone lower than this chart. Now, when I posted this last night, the market continued to go lower, and we went down to 129.85, I believe, was the last low, and now it's in that area. It's still below still in the 130 range, but we are, still drifting lower. We have now taken out the low that we made way back in September. So we have, if you looked at this on a monthly chart, this is going to be a monthly reversal in the Canadian dollar. And that could be, something of either major significance, but the market now is very oversold. We're down 8 days, and so a rally can happen at any time with this. And then you'll be able to see that the market could have a bounce back, and you'd want to watch for an ABCD correction on the downside, to see if what you're looking at. What I wanted to do was to show you the Canadian dollar here on the. I'm going to do the euro too, but as you can see here with this ABCD pattern that we had, which in effect was a 3 drive to a top pattern, we have broken now below the 130 level. In fact, we did hit 129.85 last night, which was very close to the. That took out the September lows, and so that sets up the objective is about another 120 pips, about 160 pips lower, down around the 128.50 level, where we have a 61% retracement, a 1.618 expansion of the low from September to the high in September, and then we also have a 50% retracement of the whole move. The key here is, if you'll notice, these really strong down days that we've had, and we're in our 5th one right now. Actually, so we are 6th day, and so we are due for a bounce at any time, and we'll see how much of a bounce we're going to get. But the Canadian has definitely turned the corner, from that perspective. Now, someone asked me a question to review my position on gold. I mean, the position on gold is, folks, this market does not look bearish. I mean, we went up and we've cleared the number we were looking at yesterday at 1148. The silver is still looks very, very good. I think it's got a really good chance. We just broke $16 per ounce, which is good. And, I think we're heading at least to $16.20 in the silver, and potentially a whole lot higher. At $16.20, we have an ABCD pattern, but the CD leg is so strong, it's just basically a vertical, moonshot. And so you usually have to expand that by a factor of 1.27 or 1.618, and that would take us up into the 1650 to 1680 level. But nothing looks, bearish about this silver at all. If you remember, this whole thing started way back when silver was trading around 1440, and then Zero Hedge came out and said, there's some really problems with deliverable silver. Well, as soon as that came out, the market shot up about 40 cents and didn't back off. Gold didn't hardly move during that time, and then since that time, it's just starting, to go higher. Here's a perfect example of, you don't even have to read the news or anything like that. Just look at the price action. You don't know what's happening to this. It's just really it's really quite easy. Just watch to see see what's going on, and you'll notice that that's what's going on. Maybe this is just a bear market rally, which it certainly has to be, because we did top in silver at 49, almost 50 cents an ounce. And now we're in a really strong rally phase. It could take us quite a bit higher. And the talking heads there on Wall Street, they certainly believe that this is nothing more than a short covering rally, and it certainly could be. But we could easily see gold breaking out into the 1200, 1300 range without any trouble at all, at least from the perspective that I see going on here. So we'll have to, let our charts tell us which way to go, but that's what it looks like to me. Frankly, I sort of miss hearing John Logan on the show, because his support and resistance lines with his market profile are certainly very, very helpful. Sometimes the bands are a little bit wider than I'd like to see, but they're still very, very accurate, and it has a great deal of facilitation with your trading. It certainly is, looking at it. So we'll see what's happening. So we're starting to move a little bit higher in the metals today. We've had a move higher in oil, as I mentioned. It's broken out above its monthly highs, that long-term consolidation that we looked at yesterday. It certainly held, and now it's starting to move up. Someone's asked me a question about the sugar, because that was one of the things that I was doing. The fact is, I should do that again. Just 1 second here, and I'll pull it up, because I did update it. Although I didn't, the updated chart is not quite right. But all I did was I made the comparison to October sugar to what was happening in silver. And what happened in October sugar, if you'll notice there in late September, when they get ready for delivery, there was no deliverable sugar for world number 11 sugar. And that's what happened. They had to hustle to to get out of it. And now we're trading up around the 13.70 level. We're almost at the $14 level per pound in sugar. So that would tell us that we're getting if it gets much above $14, it's going to cause problems in our family, because my wife has a set of hummingbirds in Tucson. There's about 10 of them with our little feeders out in the patio, and they come every morning and every evening for feeding. And when it rains, you should see it. It is unbelievable how many hummingbirds come to feed up, during that time. If you folks, I don't know if you have hummingbirds where you live, but they are spectacular. Physiologically, they're supposed to be unable to fly, but they certainly do a good job at it. And they hibernate. Their heartbeat runs around 400 beats per minute, and then at nighttime, when the sun sets, their heartbeat goes down to about 15, and it doesn't start perking up until the sun comes up, till daybreak. And they live almost 11 years. Unbelievable. They don't head south from where we are, Jay, because we're right near I'm only 70 miles from the Mexican border, so we have them year round. But during this time of the year, they're even quite a bit. They're really spectacular creatures, and Sarah has some of the most spectacular pictures of baby hummingbirds of the little nests that were there that she was able to take, incredible pictures of. I mean, these are really qualify for National Geographic, in my opinion, but these little baby hummingbirds were just unbelievable. And they've flown into our house a dozen times. They'll fly around the kitchen, in my office, and into the den, and they'll visit us, and then out the window they go. But it's really an amazing thing to see how they work. So anyway, that's what we're looking at. I see there's a notice that the Justice Department is going to release 6,000 inmates from federal prisons. And I have a student in that group, believe it or not, in Soledad Prison in California. I had the honor of training one of the gentlemen there, and he was brought to my attention by the warden, and he asked if I would do a class up there, on the internet, and so I did. And so I took a student from the prison. He was a white collar crime, but he sent me, his daughter sent me an email that he was going to be released, I think at the end of this month. So he must be in that group. It's the only prisoner that I've ever had. I always wanted to keep both doors open just in case I was ever put up there in Soledad, but you never know. Haven't had too much run-in with the law. I've stayed away from them. I've always had faster cars than they do, so that's the reasoning behind it. So we're going to be, I'm going to do the second show here, and remember, we're going to have, you guys have cracked me up. Someone in the den here, they have some very great comedians, and that means someone just typed in with 6,000 prisoners released. That gives room for 6,000 investment bankers to be put in jail, or stockbrokers, one of the two. I don't know if that's the case, but anyway, we're going to have Bill Meridian on at the break. He's a really smart guy, and he was the one that alerted to the fact that we could have a big break into July, which in fact, July and August were pretty nasty for the stock market. So we'll listen to hear what Bill has to say at the half hour of the next show. But right now, the market's going to open substantially higher. I wouldn't be surprised to see the Dow up 150 to take out that high at 16,830, and we'll see what happens, with that, and we'll go from that level. There's a notice now that I think Prince Saeed has doubled his ownership of Twitter. Bill Meridian worked for those folks over there for 11 years, so he knows them well. He speaks the language, and he's really doing pretty good. Anyway, we've got a lot of comedians in the room here, but that's good. Keep your sense of humor. This is just a game. That's all it is. There's nothing more than that. It just keeps score with money. That's all it is, and we'll see what happens. But we will have a strong market this morning, and whether it breaks out. And believe me, I have my crow. I'm getting ready to eat the crow. I've got it on the stove. I make it with a lot of garlic to tender it up, and it's been cooking since about 6 o'clock last night. It cooks for about 12 to 14 hours before I eat the crow. And then what I do is I take it out and I put it into a baking dish, and I make it into a casserole, almost like lasagna. And you hardly know it's even crow. Haven't had to eat it many times, but this will be one of those times. Jay, you're being a little too funny. You don't eat it once a week, because I watch what the trades are putting in, and that's a bunch of baloney, so I can't believe you with that. But we'll see what happens. This is still a bear market, folks. If you just look at the breadth index from yesterday, it really nothing really happened to make the market think that it's going to go crazy to the upside. It's already gone crazy to the upside. What am I talking about? All you have to do is look at that. But the breadth of the market, still is still hanging in there. Not very good. We flattened out a little bit on new highs to new lows, but my gosh, you can only go down so many low days in a row, especially when your advanced decline line, exploded like it did. So we'll see what happens. We're going to have a break here, I think, pretty soon, and then we'll wind up the rest of the play here to see what's going on with the rest of the markets, and we'll go from that level. But we've got gold is up. We got silver is up now. We did get above $16. We get 11.53 in the gold. We need to get that popping a little bit, and I think we will. We'll wait and see, and we'll go from that level.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, well, folks, I'll put the chart that I think is the most important, and that is the New York Stock Exchange Index chart. If we close sharply higher today, I will assume that this cycle date that I was looking at for yesterday is most probably wrong. If you look at this chart really closely, the Dow Jones is right at point D right now. It's only about 30 or 40 points away from that in the futures. so it could, easily take that out. But remember, the Dow is only 30 stocks. The New York Stock Exchange Index is really what the real market is. But, you've got to trade what they give you, and this is what's happening. We made new highs in the NASDAQ overnight, the S&P overnight. We made the 61% retracements on the DAX, the FTSE on the long-term dailies. The cycle should be here, but if it isn't, it's going to go, go probably a whole lot higher, so don't stand in front of it. That's the bottom line of what we're looking at. I had an interesting question during the break, and that was during my time at Drexel, who were the most enjoyable people to come in the office? And we had a lot of people from the entertainment business in the office all the time. And the three that everybody loved to see was Smokey Robinson, Jonathan Winters, and then, of course, Tyke Andrews from the Mod Squad. But those three were the ones. Jonathan Winters is exactly like he was on the air. He was just totally off the cuff. He was the mentor, of course, Robin Williams. And those of you that have never seen Jonathan Winters, he was a really nice guy and a real gentleman. And he fought the demons of depression all the time. He joked about it a lot. He lived his last 15 years up in Santa Barbara, California, which is not too far from where my daughter lives. And we never got to see him, after my time at Drexel, but he had come to several of the bar mitzvahs and bat mitzvahs parties, and it was all fun. And Smokey Robinson was just absolutely one of the coolest dudes ever. I mean, he's just a really nice guy. And never had any he didn't have anybody he didn't know. He just was friendly to everyone and just really outgoing, no bodyguards or anything like that. So it was really something. So anyway, that's what we're looking at here. Let's say a prayer here for our good friend John Logan. Gosh, we really miss him. John, if you're listening, get your little tookus back in here, buddy. We'd like to have you come in just as soon as possible. I don't mind setting in for you, but we do miss you. You've got some great information, and we'd like to hear what you have to say. So I think we're going to wind up the show here, and then I'll be back on with the my show in a few minutes, and we'll cover some of the things that we just covered, and then we'll also have Bill Meridian on, which you don't want to miss that. He's a smart dude. He gets big bucks when he talks, so he's doing it as a favor to us, and you should listen to him, because remember, he was the one that alerted there was a possibility of a July-August break, and he was spot on, and that's what we look for. Tomorrow we'll have Norm Winsky on the line, so just keep that in mind, and we'll go from there. So I think that's about it, boys and girls. So live every day in an attitude of gratitude and do something nice for someone who has a lot less than you today. Oh, I'm supposed to keep going. My time is not up. Oh, I get paid by the second here. I forgot. Okay, I don't really have anything else to say other than the bond market. The bond market made a lower low yesterday by one tick. Whether that's going to hold that longer-term 382 down at that 156 level, that's probably going to be the determination of whether we're going to make a bottom, but we'll watch that. We'll cover the bonds in the next part of the show, which will be coming up. So that's about it. Looks like we're going to be about 35 higher in the S&P, 11 or 12 higher in the 16 higher in the S&P, and 35 higher in the NASDAQ, and about 100 and some in the Dow. So that's it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.